The Schwab U.S. Dividend Equity ETF, or SCHD, is one of the most respected and popular exchange-traded funds in the market, particularly among income-focused investors. Managed by Charles Schwab's Asset Management Division, SCHD has earned its reputation as a reliable and efficient vehicle for those seeking consistent dividend income paired with the potential for capital appreciation. By offering a thoughtfully curated portfolio of high-quality dividend-paying companies, SCHD provides exposure to some of the most stable and resilient businesses in the U.S. economy. For investors looking to diversify their income streams or add a dependable source of returns to their portfolio, SCHD is often considered a gold standard in the world of dividend-focused ETFs. As of December 2024, SCHD has amassed total net assets of approximately $68 billion, reflecting its widespread appeal among investors. The ETF tracks the Dow Jones U.S. Dividend 100 Index, a benchmark designed to identify and include companies with a strong history of paying dividends and maintaining solid financial fundamentals. To qualify for inclusion in the fund, companies must demonstrate consistent dividend payments, strong cash flow, favorable debt metrics, and high return on equity. This rigorous selection process ensures that SCHD's portfolio is composed of only the most reliable and financially sound dividend-paying companies. SCHD holds approximately 100 stocks, providing a diverse mix of companies across various industries. Its top holdings include Bristol-Myers Squibb at 4.54%, Cisco Systems at 4.52%, and Home Depot at 4.43%, representing a blend of healthcare, technology, and consumer sectors. While the fund is diversified, it has a natural tilt toward industries known for their strong dividend-paying capabilities, such as consumer staples, healthcare, and financials. This focus aligns with its goal of maximizing stable income for investors while maintaining exposure to sectors that traditionally exhibit resilience during economic downturns. The ETF's sector weighting provides another layer of insight into its strategy. Consumer staples and healthcare, for instance, are defensive sectors that tend to perform well even during recessions due to consistent consumer demand for essentials. Meanwhile, sectors like technology and industrials offer growth potential, balancing stability with opportunities for capital appreciation. This carefully calibrated diversification makes SCHD a compelling option for those seeking both income and growth. One of SCHD's defining features is its ability to deliver consistent and growing dividends. The ETF currently offers a dividend yield of approximately 3.31%. Making it an attractive option for income-focused investors. However, what truly sets SCHD apart is its track record of dividend growth. Over the past decade, the ETF's dividend compound annual growth rate has been among the highest in its category, underscoring its ability to keep pace with or exceed inflation. This growth is driven by the quality of its underlying holdings, many of which are dividend aristocrats, companies with a history of increasing their dividends for 25 consecutive years or more. CHD's performance over the last 5 years has been impressive, with a total return KGR of approximately 13.55%. This strong performance reflects not only its focus on high-quality, dividend-paying stocks, but also its exposure to companies with significant growth potential. Unlike many income-focused funds that sacrifice growth for stability, SCHD has managed to strike a balance between the two. Its combination of robust dividend payments and capital appreciation has made it a favorite among investors seeking total returns. One of the key advantages of owning an ETF like SCHD compared to investing in individual stocks is diversification. With approximately 100 holdings, SCHD spreads its investments across a wide range of companies and sectors, significantly reducing the risk associated with owning a single stock. If one or two companies in the portfolio underperform, the impact on the overall fund is minimal. In contrast, holding individual stocks exposes investors to company-specific risks, such as earnings misses, management changes, or industry-specific challenges. Another benefit of SCHD as an ETF is its professional management and disciplined selection process. The fund's methodology ensures that only financially strong, dividend-paying companies are included, saving investors the time and effort required to research and monitor individual stocks. This set-it-and-forget-it approach is particularly appealing for those who want the benefits of dividend investing without the complexities of managing a stock portfolio. ETFs like SCHD also provide cost efficiency. SCHD has an exceptionally low expense ratio of 0.06%, meaning that investors keep more of their returns compared to actively managed funds or trading individual stocks, which can incur higher fees and commissions. Over the long term, minimizing expenses has a significant impact on portfolio growth, making SCHD a cost-effective choice for building wealth. Liquidity and accessibility are additional advantages of ETFs. SCHD trades on major stock exchanges, allowing investors to buy and sell shares throughout the trading day at market prices. This liquidity makes it easy for investors to adjust their positions or reinvest dividends quickly and efficiently. Individual stocks may lack this level of flexibility, particularly for less liquid or smaller cap companies. SCHD's strengths lie in its thoughtful construction and consistent performance. The ETF's disciplined selection process ensures that only high-quality, dividend-paying companies are included, providing investors with stability and reliability. Its focus on dividend growth makes it an excellent hedge against inflation, while its low expense ratio maximizes returns over the long term. Additionally, SCHD's diversification and sector balance provide resilience during economic downturns, making it a strong choice for investors seeking both income and growth. Another major strength is the ETF's proven track record. With a dividend CAGR that consistently outpaces inflation and a 5-year performance that rivals growth-oriented funds, SCHD has demonstrated its ability to deliver reliable results across varying market conditions. This makes it particularly appealing for long-term investors who value consistency and compounding returns. Despite its many strengths, SCHD is not without its challenges. One potential weakness is its sector concentration. While the ETF is diversified across approximately 100 companies, it has a natural tilt towards certain sectors, such as consumer staples, healthcare, and financials. This concentration could pose risks if these sectors underperform or face regulatory challenges. Investors should ensure that SCHD fits within their broader portfolio to avoid overexposure to specific industries. Additionally, SCHD, like any equity-focused investment, is subject to market volatility. While its emphasis on high-quality companies helps mitigate some risk, the ETF's performance can still fluctuate in response to broader market conditions. This makes it less suitable for investors with a very low risk tolerance or those seeking guaranteed income. SCHD makes up over 50% of my total dividend portfolio, largely because of its set-it-and-forget-it nature. Its diversified holdings, consistent dividend growth, and low expense ratio make it an ideal core investment for my long-term strategy. I value the simplicity and reliability SCHD offers, allowing me to focus on building wealth without the need to manage individual stocks actively. That said, I want to emphasize that this is not investment advice. Everyone's financial situation is unique, and it's important to do your own research or consult a financial advisor before making investment decisions. I make these analyses and write-ups as a way to learn more about my investments and share my perspective, but they reflect my personal approach and goals. While it does carry some risks, such as sector concentration and exposure to market volatility, SCHD's strengths far outweigh its weaknesses. Its disciplined selection process, low expense ratio, and focus on high-quality companies ensure that it remains a top contender in the crowded field of dividend ETFs. For investors looking to build wealth through a combination of income and growth, SCHD is a standout option, offering both reliability and long-term potential.